Don't listen to Michael Burry's predictions. Yes, you've heard it right. Although he successfully predicted the last 20 recessions, well, out of 2. Okay, he did predict several crises quite accurately. The Big Short is known primarily for predicting the housing crash of 2008, making $100 million for himself and another $700 million for his investors. But in addition to that matter, he also predicted a burst of inflation, which we're still seeing. Burry has predicted mass cutbacks in the world's largest companies. Moreover, he even warned us about the fall of meme stocks, such as GameStop and AMC. Therefore, his success in the second half of the 2000s cannot be considered a coincidence. Sure, following Dr. Burry's thoughts regarding the market is an entertaining and helpful activity, but there are actually 3 main reasons why I would like to urge you not to believe absolutely every prediction this outstanding investor puts through. Firstly, despite all his merits and worldwide recognition, not least because of the spectacular The Big Short movie, in which Burry became the prototype of the main character, he was wrong in his predictions more than once. Give this video a like and subscribe to the channel if you watched the mentioned flick. Thank you. Even the biggest investors make mistakes from time to time. Burry is no exception. Though it's not only about the prediction's accuracy, the second reason lies in information noise. Some may assume that the annual increase in the amount of publicly available info on financial indicators and investment ideas are meant to contribute to retail investors' success. But as you can see, everything is different in reality. Right, it's always good to know the economic situation, but macroeconomic indicators, stock market predictions, a colossal variety of news reports and opinions could most often bring more harm than good for not the most experienced investors out there. The legendary Peter Lynch, the guy who beat Wall Street, will not lie.
So I've always said, if you spend 14 minutes a year on economics, you've wasted 12 minutes. And I really believe that.
Even Burry's predictions tend to immediately end up in some media sources, which totally confuses some investors even more, forcing them to hastily adjust their strategies, when no changes must not be made whatsoever. The third most important reason lies in Michael Burry's strategy itself. In short, the Big Short strategy is about buying shares of unpopular companies that look as if they are on the verge of collapse, and then selling them as soon as their financial state gets more or less stabilized. One can note that Burry is an example of a classic value investor. His strategy sounds as simple as possible on paper, and in fact, it is. However, to successfully make it work, you need to master the main tool of stock selection: research. And believe me, Dr. Burry has mastered it at a level unattainable for ordinary investors. For example, let's cover one of Burry's findings: the Industrias Bachaco company. IBA is the largest producer of chicken meat in Mexico. The company finds itself in a healthy financial position. Still, despite all that, it was greatly underestimated. Burry took advantage of this underestimation and made good money as a result. Nevertheless, in order to realize Dr. Burry's genius in this case, let's see how realistic it would be for an ordinary investor to find this exact company. The IBA had many barriers for entry. There were almost no available info about the company in the media. The only way to find out a thing about the company was through its investor relations department panel. The company's website did not even have an English version, which would scare off 90% of English-speaking investors right on. Not to mention that 80% of shares belong to the founding family. You see, this is a Burry's gift: to look where no one is looking and to deeply analyze the options. Besides, although the Big Short is focused on value investing, his approach is more traderish. Unlike Buffett, who buys stocks for years or even decades in advance, Burry most often focuses on a couple of months while making purchases. Compare for yourself how much more actively the Big Short makes changes to his portfolio than Oracle of Omaha. The difference in approaches is quite telling, don't you agree? 99% of ordinary investors don't have the deep company search and business understanding skills that Burry has. Therefore, his approach will not suit the majority. In fact, statistical passive investing has proven to be a much more successful strategy than trying to predict market movements in order to enter and leave at the right time to make quick money. The main advantage of individual investors is time. There was even an officially conducted study where it turned out that deceased investors have better returns than living ones, since they did not make changes to their portfolios, which is logical. Therefore, you don't have to listen to Burry's comments for related to short-term market trends. It's much safer to focus on long-term projects like Buffett does. Warren Buffett's way of thinking and advice are shown in more detail in this video. Click on the link and get profit. Write in the comments below your own attitude towards The Big Short and its predictions. And see you in the new episodes.